Folks, you have heard me talk about the consumer being fearful and frozen. But as Taylor has just told me off air, it appears that investors are frozen. So I want to talk to a 10-year Wall Street veteran, see what he is seeing what he's hearing, and really just talk about how do we all take a step back, acknowledge what is going on, but also take educated moves. Taylor, wild times, man.
It really is. Yeah. Earlier this year, there was this enthusiasm out of the retail investor, right? So this massive enthusiasm that hadn't been seen since 2021 when things were on fire. But in January of this year, it was actually more extreme than it was even in 2021. Retail investors poured $1.5 billion a day into the stock market. That was the largest month increase of retail investors of all time.
Yeah.
And now you've started to see this, script start to flip a little bit as we entered some of this banking crisis and people started to get really concerned. And like, one of the things that's important to realize is just like, you got to take a step back to your point and realize what different asset classes, different investment types do throughout history during these times of stress, or, depending on what you think is coming, you have to look at what the assets have done in the past. Like the four most dangerous words in investing are this time is different. Yeah. This time is different. It's not. Let's look at history. Let's see what's coming. Yeah. So let's just talk about a couple of the different asset classes, right? Because everyone likes to talk about stocks, and stocks are important because over the long run, they give you the highest risk. They give you the highest return over time. But stocks historically don't do well during a recession. And that's not me saying like we're going into recession, so don't have any stock exposure. That's the opposite. You can't time recessions. You can't time bottoms. You can't do any of that. And you do want to have stock exposure because the explosion off the bottom, when that 2/3 of the way recession, that's when the stock market usually bottoms before the end of recession, and the upside is explosive. The 10 largest returning days of all time in the stock market, they average out in a single day. The average is 8.9%.
In a day.
All happen in one day. That's an annualized return, right?
Okay.
No. That's in one day. I'm saying that's like an annualized return, right? That comes in one day. That's the average of the 10 largest returning single day returns, 8.9%. Wow. They all come in 2008, in 2000, 2001 during the dot-com breakup, 1987 after flash crash, and in 2020. They all come at extremely, extremely dangerous times. So you want the stock exposure, but during a recession, stocks average negative 17.5% return. So you want it there, but you have to limit it and you have to diversify. So let's look at a couple of the other asset classes. So the best asset class to be in during a recession is bonds. Mm-hmm. Bonds historically are that safe haven asset that people buy up in a time when they don't know what else to do. And the other thing that bonds generally do well is when inflation's coming down. Inflation seems to be trending downward right now. So you're getting that twofold tailwind in the bond market right now. And there's also that reversion back to the mean. Last year was the worst year ever for bonds. Ever.
By a long shot.
Yeah, they were down. So the bond index was down 13% last year. The worst year prior to that was 94. It was down 3%.
Yeah.
So it's crazy. Again, things don't repeat themselves, but they rhyme. There's reversion back to the mean. So that's your bond exposure. And then I think the other really important asset class to look at right now is gold. And I'm not a gold bug. There are people that say like gold's always the answer. I think generally gold is actually not the answer because there's no yield associated with it. There's not much tangible value, but it absolutely is something that people run to during safety. And so people are looking for safety right now, especially with this banking crisis that's playing out, and gold is absolutely ripping. So as an investor right now, I'm not saying take any one of those sleeves and put all your money to work in them by no stretch of the imagination. I'm certainly not saying what a lot of people are suggesting, and that's short the stock market if you think we're going into a recession. That's a way to get your head cut off.
Yeah, that's a widowmaker right there. Oosh.
That's exactly what it is. Another great long-term Wall Street line is the market can remain irrational a lot longer than you can remain
be liquid. Yeah.
Yeah. So that's the story there. It's like, listen, it can remain going up, even though we might be going into recession, and you could just be getting your head chopped off. So I guess I'll get off my soapbox, but at the end of the day, it's like, guys, you have to diversify. You have to have stock exposure because over the long term, that's what makes you the most money. But you have to have bond exposure that's going to protect you at a time when we could be entering a recession, the best time historically to own bonds. And then gold is also that recessionary kind of offset. And then the other kicker on gold, different than bonds, is gold historically has worked well during inflationary timeframes as well.
Correct.
So if inflation does bounce back, that could hurt bonds, and inflation could be your safe harbor there.
And one of the things you do at Life Goal Investments is you have several ETFs that kind of do this. This is what you do for a living. It's what you
Correct.
created it for, the everyman. You want to talk about a couple of those and tell people where they can
Yeah.
find out more?
Yeah, just for context, and I will talk about that. Like prior to doing this at Life Goal Investments and building these ETFs, my role was to travel around the country. This was like a 10-year thing that I did, travel around, and I worked as an advisor consultant. I would go in and sit with families that have 50 or $100 million and construct that kind of perfect portfolio for them. And at the end of the day, I was like, these people are going to be fine without me. I grew up in a one red light town, blue collar. Like my friends and family don't have me helping them out. So why don't I just do exactly what I did inside of those ETFs, that diversified stock, bond, real estate, gold exposure inside of one ETF that can be bought at $10 a share. So yeah, we have 3 of them. 2 of them really make sense for the purpose of this conversation. One's ticker is Wealth, WLTH, and the other's ticker is Savin, SAVN. And Wealth is more of that longer term, slow grind, higher diversified portfolio. And Saving is more of that short term. I might use the money in the next 5 years and I want to just grind out better returns than I'm going to see in a bank account or a CD or something like that.
Very, very cool. And again, if somebody wanted to go look these up to see what's what, how would you recommend they do that?
Well, one, you can look at them on any brokerage platform. They'll all have the information right there. They trade on the New York Stock Exchange, but our website is lifegoalinvestments.com, and you'll get a pretty good explanation on there, a short video as to exactly what's inside of each of them, what they look like, etc.
Yeah, and do yourself a favor, folks. If you're thinking about this, go to Instagram, look up Life Goal Investments, and go watch an hour of videos. Because again, he does this every day, multiple videos. Just see what he's about, education, all of that. I look at him almost every day. I probably 5 days a week. I'm on 1 or 2 of your videos. You just do some awesome stuff. So Taylor, thank you so much.
You're the man. Super kind of you, Michael.